Hey everyone, it is Julie here with TipRanks, and today we're taking a look at a 5-star analyst's top energy stocks for 2024. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're discussing energy stocks. Now earlier this month, a 5-star analyst from Mizuho actually downgraded 8 different names in the oil and gas sector. They said they were entering 2024 with a more defensive stock selection in oil and gas. So with that, they actually upgraded a couple and named 3 as their top picks in that sector for 2024. So we're going to take a look at those companies today, what it is that they do, what Mizuho loves about them, and of course how the rest of Wall Street weighs in. You can follow along over on TipRanks.com or by downloading the TipRanks mobile app by using the link in the description down below. Now let's jump right into these stocks. First up, we'll be taking a look at Coterra Energy. Their stock trades under the ticker CTRA, currently priced just above $25 per share. Over the past 1 year, they have seen some ups and downs and are currently up 3.5%, but have cooled off, dropping nearly 6% in the last 6 months. Coterra is an oil and gas production and exploration company, primarily working out of Texas, Oklahoma, and Pennsylvania. They have their hands in the best of both worlds, with solid assets in both oil and natural gas, creating a diversified portfolio capable of weathering economic headwinds. That portfolio includes a total of 672,000 net acres across their operating areas. Coterra will be sharing their Q4 earnings report in about a month's time, near the end of February, and this follows their third quarter back in November, where they did have an earnings beat. For that third quarter, they reported earnings per share of 50 cents, coming in 6 cents ahead of expectations. The company also raised their full-year 2023 production guidance. That was driven by faster cycle times and strong well productivity. Our Mizuho analyst already had a buy rating on the Coterra stock, so just reiterated the price target on this one. But we've actually seen a handful of other Wall Street analysts upgrade their rating recently, one of those being an analyst from Wells Fargo. They noted that they were upgrading the stock based on relative valuation and strong momentum on oil production growth. Over the past 12 months, management has deftly orchestrated a turnaround for the company, and they've been outpacing their production outlook for fiscal 2023 and increasing their production guidance for 2 consecutive quarters. And they are one of 5 analysts that have upgraded the stock to a buy in the past month. Right now, the Coterra stock is rated a strong buy with 15 current analyst ratings. With 14 buy ratings and 1 hold, the average price target of $32.47 would mean an upside potential of over 29% from current prices. Down below, we can see some of those upgraded and reiterated price targets there. Our Mizuho analyst gives them a buy with a price target of $35, which would be an upside potential of nearly 40%. That is on the higher end, but not the highest. We do have one here up at 55% and a low end down around 7%. Second on our list today is Civitas Resources. They trade under the ticker CIVI, currently priced just shy of $65 per share. Over the past year, they are up 6.3% overall, but another one that has cooled off in the recent months, down 4.4%. They are a leader in hydrocarbon production and in making sustainable oil and gas operations. Civitas has productive oil and gas assets in both Colorado and Texas, and they are the first net carbon-neutral production firm in the state of Colorado. They aim to become the first such producer in Texas by the end of this year. As far as productive assets, they have 470,000 net acres in Colorado and about 70,000 in the Permian Basin. Their third quarter earnings report came out on November 7th, where they did share an earnings beat. They reported earnings per share of $2.92, coming in ahead of the anticipated $2.59 per share, and they reported revenues of $1.04 billion. The company also announced that at the start of January, they closed their acquisition of certain Vencer Energy assets in the Midland Basin Formation in Texas. Both the assets are known producers of oil and gas. Our 5-star analyst at Mizuho previously had a hold rating on the Civitas stock, but did recently upgrade it to a buy. They noted that 2023 marked a transformative year for the company with 3 significant basin entry acquisitions into the Permian, which reshaped their asset base and their extended inventory duration. Initial execution as a pro forma company demonstrated in the third quarter should give investors additional confidence in their ability to fully integrate the acquired assets into the coming year. Their stock does just have 5 current analyst ratings, but they all come in with a unanimous buy. And with an average price target of $97 per share, that would imply a potential upside of 50% for the year ahead. Down below, we can see those recent ratings, including our Mizuho securities here, with an upside of 32%, and they are actually our low-end price target. On the high end, we actually have one up above 64% from Truist Financial. And Mizuho's third top pick for the year is Chevron. They trade under the ticker CVX, currently priced at $147 per share. Now, overall, the past year, they are in the red, down nearly 15%, including a drop of nearly 6% in the last 6 months. Chevron is a well-known name in this sector, and they're actually the world's third largest oil company. In 2022, they earned a record-level profit of $36 billion for the year. The company is active in exploration and production, hydrocarbon transportation, maritime tanker shipping for both crude oil and liquefied natural gas, and petroleum refining. In their last quarter back in October, Chevron did fall short on earnings expectations, but their next quarter is coming up soon, next week on February 2nd. For their fourth quarter, analysts will be anticipating earnings per share of $3.20, and this is a year-over-year decline. In the previous quarter, they reported earnings of $3.05, falling 65 cents short of expectations. They did announce that they acquired PDC Energy and an agreement to acquire Hess Corporation. Mizuho did reiterate Chevron as a top pick for the year with a buy rating, but we have a few more mixed opinions on this stock. At Mizuho, they noted that despite some challenges in the prior quarter, Chevron is expected to maintain their projected production levels in the Permian Basin, which is a key area of growth for the company, and this is anticipated to ease investor concerns regarding their operational capabilities. They also noted that their disciplined approach to capital allocation and share buybacks has been factored into their positive outlook. On the other hand, one analyst at TD Cowen recently downgraded the stock to a hold. They noted that their primary concerns include execution risks in major growth drivers such as the Permian Basin and TCO, which may lead to market discounts, and the acquisition of Hess is not expected to generate cash inflows until 2027. The Chevron stock is currently rated a moderate buy with 17 current ratings, breaking down to 12 buys and 5 holds, and an average price target of $176, which would be an upside potential just shy of 20%. Here we can see some of those recent hold ratings coming in, and that's one of our low-end price targets here with an upside of 0.5%. Mizuho securities here with an upside of nearly 27%, and they're close to our high-end price target. So that is a quick look at 3 oil and gas stocks named by Mizuho as top picks for 2024. Let me know your thoughts in the comments down below, which ones you agree with and which ones you maybe don't. I always appreciate hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you're doing your own research and due diligence. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.